All right. So, Kevin, I asked for you specifically. You're a dividend-focused investor. I want to talk to you about this strategy. It outperformed the Dow this year. Is this something that you would do year after year? Is this a viable strategy for investors?
Listen, Frank, I don't think any passive strategy is the way I would play it, but I think the dogs of the Dow is a phenomenal place to look for and identify great companies. So you think of it as a pool to siphon through, because what you're looking for are high quality, great companies that are out of favor, and you want to get into them before they're in vogue again. And yes, 2025 was a great year for the dogs. They were up over 17%, which outperformed the broader Dow, which I think was up somewhere in the 13% range. But it's worth noting, I think that the passive strategies are fine, but it's exactly the thesis that I have of using this as a filter. Why our actively managed strategy, if you just look at Devo, it outperformed both of those names. But equity income worked for a reason. It was healthcare, legacy tech, and balance sheet discipline, not speculation.
Okay. You say a big part of this list is going to stay intact. Amgen, Johnson & Johnson, Verizon, Chevron, Merck, Coca-Cola, and Procter & Gamble, if you want to play the strategy. You as a dividend-focused investor, which one of those names are you most bullish on going into next year? I'm not saying dogs of the Dow, but if you want to use it as a starting point, as you're saying, which of these names do you like?
Yeah, I mean, to me, the healthcare stands out. We've started to see that trade come to life at the end of 2025. So you've got Amgen, you've got Merck, you've got J&J. I would continue to focus there within the healthcare space, number one. Number two, if you're looking just for yield, if you're a dividend player, Verizon always seems to top that list because it's a very slow growth company, which translates to a slow appreciation of the stock. But you get an 8.5% forward multiple. And Frank, the stock's paying almost a 7% dividend. So if you're an equity income investor and income is your primary objective, you can look at Verizon. And the third place I would look at, which is a newcomer to the list, is Home Depot. Underperformed last year for a lot of different reasons. It's not just a yield play. It's not just yield coming down to refresh the housing cycle. I really think that there's opportunities that if it just normalizes, Home Depot can be a winner in 2026. All right, so those are the names that I like.
Okay, I want to keep the metaphor going. We're calling this it's obviously the dogs of the Dow. You say some of these dogs have fleas. What's a flea when it comes to this strategy? Clearly a flea is something you want to stay away from.
Well, the idea is anytime you're looking at a passive list, there's dogs, in this case, there are dogs for a reason. So I think you really need to be selective in any time that you're building portfolios. And that's the lesson here. That's the teaching moment. As professional portfolio managers, you've got to start somewhere. You've got to build a list somewhere. And I always look at the dogs of the Dow as a primary objective of dividends that are attractive, but I'm looking for things that are a little bit out of favor. If you can buy low and sell high, easier said than done, but things tend to work out really well. I think 2026 can be another good year for this style box because I don't see rates going higher. That narrative, that macro narrative plays into 2026. Yields were at 10-year yields were 4.8 to start 2025, finishing up here around 4.1. If we get just one more rate cut next year, it still makes dividend-paying stocks look good. But according to Bespoke, the dogs of the Dow 2025 performance was the best that we've seen since 2019. That was a long time ago. They underperformed in 23. They underperformed in 24. So the message there is just making sure that you do your homework and that you're selective, not just taking the easy road and buying a passive list.